and White, we did have a bad week, but not the kind of week one would expect if you have such an impasse on the horizon on the debt ceiling. Should we be worried? What do you think?
I think we should probably be more worried, but not so much about a government shutdown as about a debt ceiling crisis. I've come around to the view that a shutdown might actually be a good thing in the sense that it would allow for a lot of the tension in the system to get worked out. Republicans in the House would show that they've stood up to Obama and shut down the government over Obamacare. Then you'd get some sort of deal after that to fund the government, probably also raise the debt ceiling, because I imagine Republicans will get some negative feedback over shutting down the government. If that doesn't happen, if we get a temporary deal to fund the government either for a couple of weeks or even a couple of months, Republicans are going to be spoiling hard for a fight over the debt ceiling. They're going to want something on Obamacare out of that. They're not going to get it. There's no way Obama's going to give them that. That means a debt ceiling breach is a lot more likely. So I'd say a government shutdown is bullish at this point for markets.
You think it's bullish for markets?
Yeah, because I think that means there's less chance of a debt ceiling crisis if you get a shutdown. I think if we punt this thing off to the debt ceiling in a couple of weeks or a couple of months, then you get more of a crisis. You get a situation where Republicans say, we're not voting to raise the debt ceiling unless you give us something on Obamacare and a lot more spending cuts. And I think the White House, when it says it won't negotiate on the debt ceiling, they're really serious about that. They're not going to come to the table at the last minute and say, okay, we'll give you what you want. You're just, one half of one house of Congress, but we're going to shut down the president's top domestic priority because you refuse to raise the debt ceiling and you'll blow up the economy. That's just not going to happen.
Yeah, no, I know. I mean, maybe it'll focus people. Josh, how do you see it?
I think the odds of a debt ceiling crisis where an actual payment is missed are still close to zero. I think most Republicans are very afraid of having a shutdown like that where they'll get blamed for whatever negative economic consequences ensue. So even though there are a lot of people in the House who are really spoiling for a fight, I think Boehner and most of his caucus know that they can talk about that fight, but they can't quite get there. And that's why in January, remember in December, you had Republicans talking a very similar good game about how they were going to use the debt ceiling to extract concessions. They were saying the Boehner rule was still in play. They wanted $1 of spending cuts for every $1 of debt ceiling increase, and they didn't get it. Ultimately, in January, the president made very clear that he wasn't going to give anything up, and he was able to get Republicans to cave. Now, I think if Republicans made one small ask on this, like, for example, if they said, we'll give you a debt ceiling increase in exchange for approving the Keystone XL pipeline, they might be able to get that. But it's looking like the only kind of debt ceiling increase that's going to be able to get out with Republican votes is the sort of thing that the Republicans were talking about yesterday, this insane laundry list of demands that the president can just laugh off and say no. They're going to be left with no option other than to work with Nancy Pelosi and the Democrats to do what they did in January and come up with a reasonably clean debt ceiling increase. So I think there's risk of a shutdown, and that's negative for markets, but the really big risk, I think, is still very, very unlikely to happen.
Yeah, that's a good point. Rick Santelli, do you think the markets are complacent about all of this?
No, I don't think they are at all. I don't think the markets are complacent. I'd like to ask both our gentlemen, because they obviously probably are way more informed on politics than I am, do they think the president understands the difference between a budget deficit and the national debt? Because when he was commenting, he certainly seems to be flip-flopping between the two. The national debt, just under $17 trillion, really doesn't go down. And the budget deficit, optimistically, let's say $670 billion, which is a much smaller deficit than we've had the last several years. But if you take out the Obama years, $670 billion deficit on the budget for 1 year, still the largest there is on record. So to me, bragging about bringing it down so dramatically, the only reason he brought it down more than anybody else is because it was higher than anybody else. And I think that the public polls are reflecting the national debt, even though I think much of the dialogue flip-flops between the two. Interest rate markets are telling me there's nothing to worry about on what's going on in Washington.
Yeah, I mean,
what do you guys think?
Yeah, I think the president does understand the difference. I don't know if he messed the two up in his speech just now, but I think his larger point is on raising the debt ceiling is that we have done a lot of deficit reduction. The Republicans have won a lot. I mean, we're talking about a spending level on the budget deal that's a lot less than what Democrats would want. We're talking
we really have done no deficit reduction. What we've done is in 2012, at the end of 2012, we pulled forward boatloads of money to beat the tax rate increase that won't be replicated. That was more of a passive gain than it was a proactive gain.
That's accounted for in the CBO projections, and what those say is that the public debt is stabilized as a share of GDP. It's going to be around 70 to 75% over the last decade because of all the deficit reduction we've had.
We're playing with the numbers.
And I think the president understands the bond markets better than you do, in that he sees, when the big budget deficit is a problem, that's because that's because interest rates rise rise because the government is crowding out private demand for capital. That's not what's happening right now. We still have these extremely low interest
they're going
rates.
down because the Fed's printing. Exactly, I'm with you.
Right, but so that this is exactly the wrong time for further deficit reduction. The president understands that.
Precisely.
He knows that that Congress
is
is off base picking this fight, and I think Congress has started to recognize that too, because Republicans have come up with this list of demands for the debt ceiling increase that doesn't even have anything to do with deficit reduction anymore. They're asking for a rollback of net neutrality. They're asking for a delay of Obamacare. They're asking for various rollbacks of environmental protection regulations.
As House of Representatives duly elected, are they not allowed to ask?
They're allowed to ask for whatever they like, but it's become clear that, we're not having a conversation about the public debt.
And what the White
anymore.
House also doesn't want to do is enshrine this notion where you can ask for this laundry list of demands, and if you don't get them, you're going to blow up the economy, refuse to raise the debt ceiling.
The economy's not going to blow up. It hasn't.
You don't think if we missed debt payments that eventually we'd have our interest rates go up?
You might say that the president knows the bond market better than me, but based on that comment, I don't think that you do.